Joining another exciting BATM webinar this morning. As you know, we have been doing many of those webinars related to innovation and technology, and that is another one this morning that we have on our agenda. If you have any questions during the session, feel free to use the chat function. We will be more than happy to ask those questions at the end of the presentation. We also have a few more webinars coming up the rest of November and early December. So keep an eye on the communications that we send out and feel free to register. We are certainly looking forward to welcoming you at our next events coming up. Now it's my pleasure to introduce Elise and Ben from Skytra. Thank you very much for your participation and your support this morning, and the floor is all yours. Thank you.
Thank you so much. Yeah, good morning, everyone. And thank you, Pascal, for inviting us to this BATM webinar. We believe is exactly the right moment to talk about really exciting topics. My name is Elise Weber. I'm the co-founder and chief marketing officer of Skytra. And I will be presenting today with Ben Ray, global head of sales. Together, we're going to explore 3 areas of interest. First, we're going to look at air travel negotiations and how forward-looking data can improve the negotiations, ease the negotiations, and also make them more pertinent. Secondly, we're going to look at contracting. We know that today air travel contracting can be a very long and painful process. We believe that air travel contracting can be simplified and made more efficient by contracting on a more regional level, and this will be possible through a new set of regulated financial indices that are measuring the price of air travel. Likewise, and finally, we'd like to talk about hedging, because these new indices that Skytra is producing can also be used for hedging your travel budget and therefore having a more stable travel budget. These 3 areas are very exciting to explore.
Elise, sorry to interrupt, but we have some sound issues. You're breaking up. The sound is coming closer and is distancing itself again. So it's up and down and people have difficulty hearing you.
Okay, is that better? I'm now really close to the computer.
Yes, this is much better from a sound perspective. Yes, absolutely.
Okay.
Thank you.
Okay, I will be talking like that. So I'm just re-summarizing what I just said. We are going to talk about 3 areas of interest. 1, how negotiating can be improved with forward-looking data, especially in these volatile times. Secondly, we are going to look at how air travel contracting can be simplified by negotiating and contracting on a regional level. And thirdly, we're going to talk about how travel budgets can be hedged and made more predictable, especially during these volatile times where our travel prices are really dramatically going up and down. So before we are going to talk about Skytra, our story, and what we're doing, Ben will give some insights on our discussions and how the attitude to business travel has changed.
Thanks, Elise, and hello, everybody. Good morning. So I think we're all quite aware that business travel is changing. COVID changed the way we think about travel, and it also presents a new opportunity for, during this time, how our programs are managed. So I think a lot of the existing questions that have perhaps been left unanswered for some time have been amplified by the crisis. And new ones, of course, have emerged as well. And hopefully what we'll present today will give us opportunities to come out of the crisis in a better position than we entered it. So some of the key questions that we're looking to solve. How do we simplify contract negotiation? Of course, negotiating by O&D is very time consuming. In fact, negotiating by letter class can also be quite painful. And often, even if you have negotiated, there's no availability, meaning you pay the full price anyway. How could you agree prices and volumes across multiple carriers more efficiently? Another question is, how do you quantify the savings from your program? How do you work better with your TMC, performance monitoring? And also, increasingly important now is, how do you make your staff, your travelers accountable for greenhouse gas emissions that result from their decisions? Of course, the key question is, what is the price of travel? For the future, for the past, for an airline, or for an entire region? And obviously, up until this point, there have been few answers, or unfortunately, actually, there have been too many answers for the reference price of travel. Elise, perhaps could you tell us about why we were even here today?
Sure, of course. I mean, definitely, just to pick up on your last point, Skytra is in a good position to provide the price of air travel. But I'd like to spend just a couple of words on why Skytra was created in the first place. So Skytra is a 100% Airbus subsidiary. It's a financial services and data company based in London, and we are approximately 25 people. So why did Airbus launch Skytra? Our value proposition is to bring two new resources to the market to strengthen the aviation industry. One is a unique data set to support strategic decision taking. And this is exactly this data set that can be leveraged also for negotiation. And secondly, we are going to provide regulated benchmarks that are measuring the price of air travel around the world, which can be used for financial risk management and for contracting. So how did we start it? How did we come to this new business? As you might be aware, airlines are having a very, very challenging business model. They are facing global events, and I think this is today more true than ever. It's a highly competitive market, it's a seasonal market, and it's very capital intensive. And as you can imagine, Airbus as an aircraft manufacturer, when selling airplanes, we were seeing our customers that they were really struggling in putting down the capital on long term for buying aircraft and new aircraft that are also less fuel consuming. Because, and this is what's here in the red box, revenues come in the last minute. Airlines have very volatile revenues due to mostly the trend towards late booking and also due to the fierce competition. So how can you invest and think long term if your revenues basically come in the last 30 days before travel? So when looking at volatile markets, we were thinking there are already solutions out there to basically reduce volatility. And we looked at other financial instruments because after all, our customers, the airlines, are already managing all other risks, all other types of volatility. If you think about, for example, the price of oil, it's highly volatile. But today they have treasury teams and they can hedge that. So they can make the cost that they are paying for their oil consumption smoother. They're also hedging interest rates or they're also hedging currency. So we wanted to enable our customer to also hedge the other side of the equation. These question mark, we wanted to fill it. So what is the equivalent on the revenue side of the cost of oil? We wanted to create a new index, new reference, a new reference for the price of air travel that would permit our customers to become more financially stable by doing both things at the same time, hedging the costs and hedging the revenues. As a consequence, the part in the middle, the EBIT margin, is more stable and it gives our customers the possibility to invest long term. So this was really the genesis of Skytra. But of course, in order to achieve that, how can you measure the price of air travel? It seemed to be a huge task because the markets are all different and ticketing and the data is so fragmented. And therefore, our first big task was to build up a database that would permit us to measure in a reliable way the price of air travel over the world.
Thanks, Elise. And of course, stable airlines also means for more stability and more stable pricing for customers and passengers too. So essentially, we have assembled the world's largest airline ticket database, where we now see around 83% of all global tickets daily on a worldwide basis. And this has enabled us to build two products. The first are the Skytra Price Indices, which are our regulated benchmarks under the UK FCA, under European benchmark rules. We produce the price of travel in specific markets on a daily basis. And we'll show you from our live dashboard these prices and these markets and how they each have very unique characteristics. Skytra Price Indices will be the first and the only regulated benchmarks measuring the price of travel in the world, and therefore can be used both as financial instruments for contracting as a reference price, the reference price, but also as a hedging instrument for treasury teams to reduce volatility of travel budgets. If, for example, you have a 20% volatility on a budget, and the budget is maybe 100 million over the course of a year, for a CFO, that's a very big headache to manage, and of course for the travel manager too. Now the other product is AirTix, and this essentially is our forward-looking data. So looking at how prices are for next week, next month, next quarter, 12 months away. All of the data and our methodology, which is patent pending, is based on our two main data providers. The first being IATA, the DDS data set, where we see around 1.6 billion transactions. And the second being price checks, so offered pricing that we take from kiwi.com. Prior to COVID, we saw about 20 billion offered prices a day. And we have a unique patent pending methodology to take an offered price and match it to a specific seat transaction. Essentially, therefore, we aggregate literally from the bottom up, and therefore we see by route, by carrier, by any granularity you like, forward data, which can be incredibly powerful when looking at the future prices and how they're developing. Essentially, the unit of metric for all of our data is based on the dollar per RPK, which in simple terms is the cost of moving a passenger 1 kilometer. And we'll come into some of the extra benefits of being able to look at your travel spend and your travel budget in this way, because essentially it's not only the way that airlines for many, many years have been reporting and analyzing their own performance, but of course, every travel budget starts with an estimated volume and a budget to go with that. So by looking at your budget in a dollar per RPK method, you then have the ability to start comparing carriers, routes, geographies, and everything can be a lot more transparent. Now, in terms of negotiating, our AirTix business intelligence product, the forward-looking data, which is based on 83% of all tickets sold globally, essentially gives you far greater visibility into the future. This screenshot here on the bottom right, we're looking at Brussels Airways, Lufthansa, BA, and Air France. I recognize it's quite small. You might have to squint at the screen. What we're looking at here is the prices or yields in dollars per kilometer for Q1 2021. And you can see here that Lufthansa's prices are almost 5% higher than last year, whereas Air France's prices for the same period are over 15% lower. Now, this is just one snapshot, and this is looking across the whole world. But we can narrow this down by a specific route or by a region, essentially because we aggregate from the seat up. the capabilities to look at pricing is incredibly powerful. However, the Skytra Price Indices, I will pass to Elise, offer another unique opportunity.
Indeed. As mentioned before, the Skytra Price Indices are regulated instruments, and this permits you to integrate them as a payment mechanism in contracts, for example, with airlines. So the Skytra Price Indices could be used as a reference price for negotiating discounts on a regional level. What I would like to do now, rather than talking about abstract indices, is to show you the dashboard, and so we can look together at how the Skytra Price Indices, which we're already producing on a daily basis, are looking like, and also how they have behaved during COVID. I hope you can all see my screen. And what we can see here is the 6 Skytra Price Indices that we are producing. As Ben was mentioning before, the unit of measure is the cents per RPK. So the cost for transporting one passenger 1 kilometer, and it's a 28-day moving average. We have here 6 markets: Europe, North America, Asia Pacific, and the interconnecting routes. So what we can see here on the first look is that the levels of, when looking at on a per kilometer basis, are different from market to market, the European one being the most expensive. And the very long haul market, for example, Asia Pacific to Europe or Asia Pacific to North America, are more on the bottom of the page, so the yellow and the green line. But what's more important, rather than only looking at the level of prices, is the unique market dynamics. So, for example, you can see that Europe to Europe is a very seasonal market, which is the dark blue line, as opposed, for example, to North America, which was a very stable market. So the turquoise line hardly moves until, of course, COVID kicks in, but we will zoom in a second on what happened exactly in the different markets during COVID. Other markets, like, for example, Europe to North America, you can see very, very strong summer seasons. So here, when scrolling over, every July, you see prices going up for the travel between Europe and North America, and it's always bidirectional. If you compare this to the orange line, which is Asia Pacific, you can see that the summer season here is less pronounced. But what is pronounced is the Chinese New Year, where prices always rise around February. You can see it in 2018, and you can see it in 2019, and also in 2020, just prior to COVID, before then prices collapsed. So on a high level, what can be said is that every market has its specific seasonalities, and that the way to look, that therefore these indices really nicely capture the inherent market dynamics and the pricing behaviors. So what I would like to do now is to look more into detail at what happened during COVID in the Europe-centric market. So when we look at Europe to Europe Skytra Price Indices, what we can see here on the left-hand side is actually how prices have evolved in the last 3 years compared to 2020. So you can see that even if the lines are have some differences, globally speaking, the movements between 2017, 18, and 19 were similar. What happened during COVID, and if we look on the right-hand side and we express the numbers in percentages in year-to-date returns, if you look at the orange line, prices dramatically fell during the lockdown period in March or April. The prices in Europe, the ticket prices, fell by 21%. During the summer, there was a bit of hope, and we can look at the volumes afterwards too. Prices were catching up again and were reaching almost the levels of the previous years, but this positive news was unfortunately only for a couple of weeks. Until then, now the prices dropped dramatically again, and we are even in a worse situation compared to April. Prices are now down by 30%. So we see that the seasonalities that we would have expected in Europe are basically totally broken. If we look at another market, another Europe-centric market, Asia Pacific to Europe, I'm sorry for that. Let me see. I have apparently a connecting issue with our web. Let us reconnect. Yep. That's the joy of live presentation, but here we are. So if we look at Asia Pacific to Europe, we can see a different dynamic. Here again, the 3 previous years were pretty much with the same patterns. But what happened here in percentage term, if you look at the orange line here, prices dropped by 15% only, which is less dramatic than in Europe, but then surged to plus 40%. So this was driven by essential traffic, by people just desperately trying to come home between the Asia Pacific and the European market. At the same time, capacity dropped, so there was only little flights left for repatriation flights. And it's mainly because we have looked into the data, Chinese mainline carriers who were charging really incredibly high prices to bring people back home. Now prices have fallen again and have reached the levels of the previous years. Maybe to finish, the last Europe-centric market, Europe to North America. Here we see another pattern. What's really interesting when you look at the previous years, and there is no other market that shows this strong, let's say, this strong convergence of all the lines. The lines are almost really superposed. What happened in during COVID is that the most stable market really dropped by minus 35% in terms of pricing. During the summer, it was not like in Europe. The market did not recover in terms of pricing. They stayed way below the previous years at minus 5%, and now they back down at minus 40%. And this is really a big impact for the American market, which again was one of the most stable markets so far for the last decade. To finish with, I'd just like to look at a complementary view on the volumes. Even if our main value proposition is about measuring the price of air travel, of course, as we have all the ticket transactions, we can see the volumes. And this should be a familiar picture to you, because we can really see here what happened during the crisis in terms of volume. The first market that was impacted by flights stopping was Asia Pacific to Asia Pacific. The blue line went off the cliff already starting in February. The other markets, it took them basically 1 more month, but then they followed the similar trend. Interestingly, the Asia Pacific market, so the blue line, has then almost consistently recovered until recently, where it fell down a bit, but the volumes are currently at minus 50%. The European market, we have already mentioned that before, there was this summer hype where everybody was booking on short term for summer holidays. Prices went up, but also volumes. So volumes in summer were down by minus 40%. It's still, of course, much less than the previous years, but there was a bit of hope. Now volumes, as pricing, as we have seen before, are down again by minus 70%. The American market has also evolved positively in terms of volumes during the last couple of months and is currently at minus 60%. So all these insights that we just that we have seen on the dashboards are really, really valuable. But the really unique value proposition of these indices is that they are regulated instruments, which means that you can use them for contracting. How could that work? We just saw, for example, and this is here schematically shown on the right-hand side. Let's imagine for a second that the green line here is the Skytra Price Index, measuring the price of air travel in Europe to Europe. If you are a corporate and you isolate your travel spend in Europe, you could look at you can look if your travel spend in Europe is actually having the same movements as the Skytra Price Index. The same movement means it correlates. It can be above or it can be below, but the movements are the same, which means that if you're in the lucky position that this is the case, you could take the Skytra Price Index as a reference point for all your negotiations for flights taking off and landing in Europe and negotiating your discounts based on a regional level rather than going on an OND level. We are, and that we will close with that at the end, more than happy to do some proof of concept with you and look at your travel spend and to see if your ONDs are correlating. But the key message is here being that if this correlation is given, you could drastically simplify your negotiation by taking one common independent fare index and negotiating your discounts based on a regional level.
Thanks, Elise. Yeah, not only that, of course, your colleagues in Treasury could also use the Skytra Price Indices to reduce the volatility in that budget as well. Now, of course, prices in the real world will go up and they will go down, but the use of the Skytra Price Indices as a hedging instrument will allow these contracts to stabilize cash flows, thus giving comfort to the financial team and therefore reducing volatility in these very volatile times. We're obviously happy to discuss the mechanics of that market with your colleagues in Treasury too.
Sure. One last element we would like to highlight, which is not one of our core value propositions. However, thinking in kilometer rather than thinking on an OND basis opens up new possibilities in terms of combining it with other metrics. And if you are able to combine it with other metrics, it gives you the ability to really steer the travel behavior of the travelers of your company depending on what you want to achieve. I'll give you an example. If you're measuring the cost in cents per kilometer, but also, for example, the carbon emissions per kilometer and the journey per kilometer, you basically think per kilometer and you can build really powerful ratios depending if, for example, your company has currently a big cost-cutting program. You could focus on the cost element. However, if, for example, you're struggling to achieve your carbon footprint objectives, you could, in your travel policy and in your system, push flights that have a lower carbon emission. Or ultimately, if you now during COVID want to reduce the time your staff is traveling because you are, for example, you want them to take only direct flights with no connection, you could push the direct flights. And without going into all the details, it gives you the possibility with the same denominator to build powerful ratio and to steer your travel behavior and your travel spend according to your company's priorities. So we believe that it's really a right time in order to rethink these three areas, and they're actually nicely built up each other. You can start with using the data for negotiating, then embedding Skytra Price Indices into your contracts, and finally, this can be the last step, work with your colleagues from Treasury to also stabilize your business once your volumes come back. We are more than happy to accompany you in a proof of concept. And of course, it has to be done on a case-by-case basis, but we're more than happy to do that together with your TMCs and your partner airlines, because we have to look at the process on an end-to-end way in order to start the transformation. But we believe that this crisis is a unique opportunity to start the transformation journey and to come out of this crisis in a better position than before. Thank you very much.
If there are any questions, and maybe Pascal, you can.
Yeah, so first of all, thank you very much for this insightful presentation. I think it's a lot of food for thought for the people that have joined us, because it's not the typical content that we often present, but it absolutely, and I agree, it creates some opportunities for corporates as well for TMCs, in my opinion. So great stuff. Thank you very much for that. We just received a question, and while I'm asking that question, if anyone on the call has other questions, feel free to submit them in the chat function. So what's your commercial financial proposition offered to corporate clients? Is it a subscription model, or is it a pay-as-you-use model, or any other proposition that you have? Can you elaborate on that?
Sure. So just to give an example, the Skytra Price Indices can be purchased. This means that we are selling licenses that gives you the right to use this data, for example, for contracting purposes. And then we have, of course, different fee structures depending on indices you want to use, how you want to use them. But yeah, our business model is basically to sell data licenses to end customers, that travel industry, from the financial industry. But in a nutshell, it's the sales of data licenses. And therefore, it's key that if we want to do this journey, we of course also involve not only the corporates who wants to use this data or these indices, but also the TMCs and the airlines, because it has to be embedded in the overall flow.
Thank you very much. I do have one question. As a corporate, is there a possibility even to integrate your own data from your own specific program into your system, so that you can start comparing automatically your indices, if you want, versus what you generally capture?
So what we are providing is the data. It means that we will provide data feeds. These data feeds can be integrated in any system that today corporates are using. From the conversations we had, it's really fragmented. Some corporates are using systems that are provided by the TMCs. Some have independent third-party systems to monitor their travel spend. So what we are offering is not, let's say, the technology, the system, but we offer a data feed. But we can integrate this data feed into any existing monitoring system, which would permit indeed, and Pascal, I think this is very pertinent comment, to monitor, for example, your travel spend against prices you would have been able to purchase on the market.
Excellent. Yes, absolutely. And I have not received any other questions at this moment, so I'll give it one more minute. And if we don't have any other questions, I think we can close the webinar for now. But sure, I want to thank both of you for this insightful presentation. The recording of the presentation will be available on our website for our members that weren't able to join this morning. And indeed, I did not receive any other questions. So thank you very much. We'll stay in touch. And for all the people that joined us this morning, again, thank you for your attendance. Stay tuned for more webinars and more BATM content coming soon. and we hope to see you all at one of our next events. In the meantime, stay healthy, have a great day, and I'll talk to you soon. Take care. Bye-bye.
Thank you, Pascal.
Thank you.
Thanks. Bye-bye.